the link for you to complete the attendance form as well as an evaluation form at the end of the session. If you can click on the link, there's just 3 questions that you must enter: your student number, your module code, and whether you're Cape Town, George, or any other province. And then the evaluation form you can do after the session. I don't want to use your teaching time, so please enjoy your session. I will be here in the background if you need me for anything. The facilitator has my number, and he can also send me a WhatsApp. But anyway, everybody enjoy your session. Good luck, and I hope to see you back in the next class. Thank you.
Thank you, Claudine. Good day, everyone. Hope everyone is ready for today's session. Just before we start, I'm just going to go through again the protocol on how we are going to proceed, and anything else we'll just take it from there. So I'll cut straight to the chase and I'll share my screen and we'll start with today's session. Just as just as confirmation, class is for AUE1501, Introduction to Auditing. Just housekeeping rules as a reminder is to switch off your video, mute your mic. Should you want to ask a question or comment, you can either use the raise hand feature on your Teams, or you can unmute your mic and then you can just jump in. And as Claudine has alluded, you need to complete the link in the meeting chat, that is to confirm your attendance. We will have the link again during the session, and towards the end, this will also include the feedback form just to evaluate how the session has been. And then for any study support related queries, you can send an email to cityandtat@unisa.ac.za. That is for the Cape Town office. So any study support related queries, you can send it to that email. And then session overview, what we'll be covering today is to firstly recap on what we did the previous session, to-do list, that is / homework. And then we will finish off what we didn't finish for session 1, that is still under topic 1, study unit 3, internal control. And then we'll start with today's topic, which is the internal auditor. And then if there are any questions while I'm going, you're more than welcome to raise a question rather than to leave it towards the end. And also remember, I said this needs to be interactive, so you're more than welcome to ask any questions. And I have written the names of you guys that are here already, so I will be calling names to ask questions, so be ready for that. So we first started off with the various types of business entities. We looked at a sole prop, a partnership, close corporation, and also a company. Azi, can you just give us one characteristic of a sole proprietorship? Azi, are you there? Okay, let's take someone else. Pumza, can you please assist?
I'm starting with the network. Sorry, I'm here.
Oh, sorry, apologies. So I was just saying, can you please give us one characteristics of a sole proprietorship under the types of businesses?
Okay, so basically, a sole proprietor is one person is like a business that is owned by a single person, whereby if the person dies, then the business will cease because it's not a partnership. It's only owned by one person, and everything is focused on one person, and the responsibilities and everything else falls to that one person.
100% full marks for you. If you've got a star, you can, or maybe if you've got paper, you can cut a star, put on glue stick at the back, and then put it on your forehead. 100 marks for you. Let's go to Ethan. Please give me characteristics or features of a partnership. I know you there, Ethan. Okay, let's pass Ethan. Natasha, can you please assist? Okay, let's carry on. Muso, can you give us features of a partnership?
All the features of the partnership, mm, I think it's owned by 2 people to 20. I think the maximum. And our last 6 hours in here, so it's my first time today.
Okay, no, that's fine. That is also correct. Minimum of 2 partners to a max of 20. I think that's fine. As we said, this is just a recap, so you don't need to give everything. Thank you very much. Let's go to Azipeli for close cooperation.
Sorry, Azipeli and Az is the same person, but I couldn't log in with my account. So I'm logged in as a guest now.
Oh, you couldn't log in with your Unisa account.
Yes.
Oh, okay, no, that's fine. Okay, that's fine. I'll pass you then. Let's go to Janae. Janae, can you please give us features of close cooperation? Okay, I think Janae is not there. Let's try Ethan again. Ethan, can you please give us characteristics or features of close cooperation?
Hi, can you hear me?
Yes, I can hear you loud and clear.
Close cooperation is 1 to 10 members. They are they don't exist anymore, but you're not allowed. A business isn't allowed to register a close corporation, but they are still a company, existing company.
Yes, okay, so just on the last part, so as you are correct, you can no longer register a close corporation. If you do want to convert, you can either convert, so you can keep it as a close corporation, or if you want to convert, you can convert to a private company. So also full marks for you. Thank you very much for that. And then let's go to the last one, which is companies, and let's try Oluetu. Oluetu, can you give us characteristics or features of close cooperation, sort of companies?
Hi, I can't participate because I don't have a book. I'm still at work. I just
Oh,
came
you
here
still
to
at?
listen.
Oh, okay,
Sorry.
no, that's fine. Okay, let me help Oluetu there. So for companies, so number one, you can either have a public or a private company, but in this, you can have a public or a private company. So that is the types of companies. But in this instance, we're looking at public companies. And with the public companies, the word would end with, one of the public entities is ESCOM. It's part of it. It's regarding shares. Is shares are available to the public. For example, you would recall some time back, I think it was about 5, 6, 7 years ago, where Sasol had offered shares to the public. I think they were called Pumelele shares, if I'm not mistaking it, for the multi-choice shares. But there was a time also, yes, it was Sasol Inzalo shares, if I remember correctly. So there was a time that they had offered shares to the public. So shares are offered to the public. They need to They need to register with the JSE. And in our instance, we looked at specifically the categories of companies, which is either profit or non-profit. And under profit, we looked at state-owned, we looked at public, we looked at private, and also personal. And under non-profit is just, non-profit organizations. Moving on to the next one, we looked at leadership ethics and corporate governance. This is where we did the introduction to corporate governance, and we looked at the three principles, specifically leadership, ethics, and corporate governance. With leadership, it's where we said, the board must be seen, they must lead by example. Under principle for ethics, they must act ethically towards the business during any business venture. And looking at corporate governance, they must lead, they must govern the company in a sustainable manner so that the business, should not cease to exist. And then we had a to-do list, either we can call it homework. So you had to go through the Judge Mervyn King video, meeting the man himself. I hope you did go through and watch that video. I think it was about 8 minutes. And then the second video was the background to the King 4 report. That was just specifically with the King 4 report. If you haven't done it, please go through it. As I said, it's just an introduction on what you had to do. Unfortunately, we do not have time to go through those videos. Hence, I said you need to go through it. And this was on, if I can just confirm the page numbering, this was on page 20 of the study guide, activity 2.1 and activity 2.2. There was also, okay, that is the homework that I've just confirmed now, 2.1 and 2.2. And then you also had, activity 2, the Judge Mervyn King video, and the background to the King 4 video was internet activity. There was specifically homework for activity 2.1, where you had to list the business, society, and the new global realities that characterize the 21st century. I won't go through specifically the solution because this is contained in chapter 4, page 5 of the textbook. Also, activity 2.2, where you had to describe the 5 main objectives of King 4. This is also contained in chapter 4, page 7. And then you had also to do activity 2.4, that you had to expand on what is meant by the 6 characteristics which describe 6 characteristics which directors should cultivate and exhibit in their conduct. This is also contained in chapter 4, page 19 of 21. So as I said, since it's a straight through exercise that is from the textbook, I won't go to the solutions. Any questions before I cover internal control? Any questions on the previous session? Any misunderstanding? Okay, so let's proceed. So just in a nutshell, what we've covered, we first looked at the types of business entities that are there. So for example, if you want to start a business, we looked at corporate governance, how you should govern your business, how you should lead, what your ethics should be. But one other part of running a business is internal control. Let's try Pumza again. Pumza, what do you understand by the terminology internal control? You can even use a day-to-day example that you have to make us understand what internal control is. Pumza? Okay, I just need to check if Pumza is still on. Natasha, let's try you again. Do you perhaps know what internal control is? Okay, let's try Linda. Linda, can you give it a go? Or any volunteers? Remember, guys, this needs to be interactive. Eh? This is how we will learn.
Isn't it the management who's responsible for running all aspects of the entity?
In relation to what?
The objectives of the business.
Okay, give me more.
Um,
Think of it. Okay, let me direct you. Think of it this way. Internal, that is within the business. Control is what are you controlling within the business. There's a keyword that I'm looking for. And as very much as I do know that it might be your first time doing this, but I need to pick your brain. So we talked about starting a business. We talked about how you should run a business. And now we're covering this one aspect. What would we be controlling?
um, isn't it to ensure that we follow the rules and regulations of the business?
In relation to what? Still haven't given me that part.
Um, to abide the country's law.
Yes. So in a nutshell, that would be compliance. I'll give you a mark for that, but I still need more.
Uh,
Okay, let me jump in. So as I said, thank you very much, Ethan, for volunteering. So we said you're starting a business. This is how you want to run your business. You want to act ethically. This is how you will lead it. Now, the one part that also you would need to take care of is internal control. And with internal control, it's where, and the keyword I was looking for, Ethan, was risk mitigation. So internal control is about reducing risk. Either you reduce risk or you avoid risk. We'll go through the specifics just now. So for example, let's say that let's use an example for fraud. You want to have internal controls that will mitigate fraud. So now what will you do? For example, you can have what we call segregation of duties. So number one, you would have, let's say in the finance department or in the auditing and finance department, you have a person responsible for checking, let's say we're checking payments. So we are saying that we've got an invoice for 10,000 rands. What have we paid? We paid 10,000 rands. Now that will be, there's no, funny case about that one. But we've got an invoice for 10,000, but we paid, the supplier 15,000. Why did we overpay that supplier by 5,000? So this when then we need to have controls, and one of those controls, as I said, could be segregation of duties. Segregation of duties is so one department would receive invoices from suppliers. They would capture that on the system. Once they've done that, it goes through the system, it goes to the next approval person. Now, let's say, for example, that will be the manager of that team. They are confirming, yes, I do see an invoice of 10,000. I do see that a payment request for 10,000 is made. And then it goes to the finance manager. Finance manager also sees, okay, I do have confirmation of 10,000 invoice. I also do have payment request for 10,000. Let's say they sign it off and then it goes through via the system. Even the system on itself, it is an internal control, because if you can imagine, let's say, for example, you receive on average a month, let's say 1,000 invoices. Definitely there's going to be somewhere along the line that there might be invoices that are missed, and having it on the system, it's easier that way also because there's an audit trail. We received the invoice on a certain date. It was received by this consultant or auditor. They processed it on the system on this date. Here's the maker date. Here's the checker date when the team lead or the supervisor checked it, when it went to the finance manager, when it was approved. Those are the things that we are covering in internal control. And as I said, one of the measures would be safeguarding of segregation of duties. One could be safeguarding of assets. You will notice, for example, if you are working already, or maybe when you were in high school, that even the desk you're sitting on, it is allocated a number. That is safeguarding of assets. So the auditing or the compliance team, they've got a register of all the assets that belong to that business. They will know specifically this table has got this number. When they physically go and check if that desk is there, they will check it with that number. If the desk is there, then quickly you will notice that specifically that desk with that number, it's missing or something has happened. That is also another way of safeguarding of assets, but we will look through that through the session. So that is what internal control is. There is a video that you would have to watch. So also remember, I said it's easier or preferable that you pre-read to go through the content before the session. Like for example, in this instance, we do have an internet activity 3.1. This is on page 25, where it was it's a short video where it's introducing you to what internal control is, even though it was for a non-profit organization, but generally, the thinking is the same. And then when we look at exactly what internal control is, there is a short definition on the top of page 26. It says it's the policies and procedures that are put in place that will include the implementation of effective internal controls to ensure, among others, the efficient, effective, and economic operating of the business. As stated above, internal controls are implemented in response to risk. So if you can just move one step back, it's for the efficient, effective, and economic operating of the business. So basically, risk mitigation, it's about, mitigating all the risks so that the business runs smoothly, that there are no interruptions. And then what we're going to look at now is just an overview of internal control. Just before I do that, any questions before I proceed? Any questions before I proceed? Okay, so let me continue. So let's look at that diagram on page 26. So effectively what it says is we've got management that run the daily activities, as Ethan had alluded, who implement the policies and procedures. Now the policies and procedures is dependent on the company. For example, there will be an HR department, there will be a finance department, there will be a procurement department. So all those policies and procedures are the responsibility of management, and policies are there to mitigate or to address risks. In this instance, financial risk. And this is managed through accounting records, and we'll just have a look at that now. So number one is the safeguarding of assets, as I had explained earlier, preventing fraud, also I said that earlier, comply with law or regulations. Ethan did speak about it a bit, where internal control, we are making sure that we are complying with the rules of the country. For example, let's say you are a chemical business, you need to follow the policies and procedures on how to dispose of chemical waste. So that would be part of complying with the rules and regulations or policies and procedures of the country in relation to the chemical industry. And also looking at preparing annual financial statements. How should we prepare them? What are the things that we need to look out for? For example, you've got an invoice for 10,000 Rand, you need to see a payment of 10,000 Rand, not more, not less. Because if there are, then we need to ask questions. And if there are any questions, obviously you will find out, what had happened. For example, let's say the company underpaid the supplier, for whatever reason, and it could be a sense that when a supplier has submitted an invoice and did not agree with that invoice, and we end up agreeing paying a lesser amount, we need to get an updated or amended invoice from that supplier, so that when an auditor looks at that, they don't need to ask questions. As I said, you see an invoice of 10,000 Rand, you see a payment of 10,000 Rand. And essentially all these are to operate the business efficiently and effectively. So if you can think about it, you've got a case where, like for example, with Steinhoff, yes, we all believe that, it's a company run by good management. However, at the end of the day, that was the case. And as a result, we wouldn't say that it was operated efficiently and effectively, because of the allegations that were made against the company. And this is also contained in the textbook in chapter 5, page 3 to 5. Any questions on what we've just covered? Any questions on what we've covered? If not, and for those who've got textbooks, let's go to chapter 5, page 5, and let us look what the definition for internal control is. So remember, the study guide is like a summary of what the textbook is. However, the textbook is the one that is giving us more information. So as I said, this is chapter 5 of the textbook, and I'll read so long. So it says here, internal control can be defined as a process designed, implemented, and maintained by those charged with governance, management, and other personnel to provide reasonable assurance about the achievement of an entity's objectives with regard to the reliability of the entity's financial reporting, the effectiveness and efficiency of its operations, and its compliance with applicable laws and regulations. Exactly what we've just said. I'm not sure if there are any questions before we look at the limitations of internal control. Any questions? Okay, let's look at limitation of internal controls. This is also on chapter 5, page 4 to 5. We don't need to go through the textbook because we've got diagram 4 in the next page of the study guide. So the inherent limitations of internal control. So what we mean by inherent is naturally, those limitations will be there. And the first one is cost versus benefit. So with that one is, we want to safeguard ourselves from fraud. But now, what will be the cost attached to doing that? If it's a costly exercise, most probably management will say, look, let's not go via this option because it's expensive. Hence, we've got the first one there as cost versus the benefit. The second one is abuse of responsibility. Let's say, for example, the final signature on an invoice is with the finance manager. So if the finance manager feels that, look, I'm not going to pay this invoice, then they're not going to pay the invoice. That is also, an abuse of power. Let's say, for example, if there is maybe corruption involved there, and the supplier says, look, I'm not going to pay whatever you want me to pay, and as a result, if the sole responsibility is on the finance manager, they will end up not paying that invoice. Looking at the third one, procedures may become inadequate. For example, they could be tedious, they could be inadequate in the sense that it's just covering one specific department instead of the whole entity, and it always goes back to the cost versus the benefit. Potential of human error, for example, with the one where I said you've got a team that receives all the invoices, finger error is quite easily made. It's just a tap of an extra zero. 10,000 could end up being 100,000. But if you've got those internal controls in place, the next person who will check that, they'll be able to easily see that, okay, look, there is an extra zero typed in there. Controls may be directed at routine transactions rather than a non-routine transaction. Also, in relation to procedures may become inadequate. So what we mean by controls may be directed at routine transactions rather than non-routine. Let's say, for example, part of our process would be we load the details of a supplier once, and then for any future contributions, we always refer back to that, to that bank account, for example. So now in this case is, should there be any future payments that need to be made to this supplier, automatically they will go through via the system. But if, for example, the supplier has not informed us of a change in bank details, we'll always go and pay that money either to, the incorrect bank account, meaning that it's owned by someone else, or the account has been blocked, and you'll end up maybe finding that supplier, not happy with you or the company, but also because they did not provide us with that information. So routine versus non-routine transactions. possibility of circumvention of internal controls. Everything could just collapse. Management would not be, decisive or efficiently and effectively, handling internal control. Let's say you've got 5 departments, they've all got their own internal control measures. One slip from one department could hamper the whole business. It could also be financial, either fraud or corruption. Any questions before we move to components of internal control, which will be homework or self-study, if I could put it that way? Any questions on what we've covered?
No question.
No question, thank you. So please make a note on your side that for components of internal control, that will be self-study. We will also just touch on it when we start the session next week. There is also activity 3.4, which is the solutions are there as well, so you can run through that as well. Now let's look at the elements of each component of internal control. Actually, this also ties with the components of internal control. So when you read 3.4 and 3.5, read those two in relation together, because 3.5 is in addition to what is contained in 3.4. But what I want us to do now, before we move to today's session, is to go to activity 3.6. This is on page 30 of the study guide. So while you're still paging through, as I said, 3.4 and 3.5 is self-study. We'll just run through it when we start the session again. So let's look at activity 3.6, where it's asking us to list the stages in the risk assessment process. This is contained in chapter 5, page 6 of the textbook, and it says a risk has to be defined, risks have to be identified and assessed, and risks have to be responded to. Let's break it down a bit. A risk has to be defined. So whenever you start a business or you're going to do something, you always ask yourself a question: what could go wrong? And this is what we're saying, or we're asking about defined. What could go wrong? Let's look, for example, let's use the example of the finger error, where instead of you typing 10,000, you add an extra zero and it becomes 100,000. So what would be the risk? What would the risk that would be defined? One would be human error, and how will it be identified? It will be identified, this one will be quite easily, because you've got an invoice that says that it must be 10,000. However, on your payment request, it says 100,000. So how will it be defined? We'll always do that comparison, what we received and what we have requested to be paid. It must be assessed. How will it be assessed? Now that is going into the nitty-gritties of specifically how is this invoice made up. Does it actually total that 10,000 rand? Yes, it does. You've ticked the first box. Let's go to the second one, which is the payment request. Is it loaded to be paid from the correct bank account of the business? If the answer is yes, that is ticked. Is the amount the one that has been invoiced? Yes, also another tick. If not, why has it not been done the case? For example, we need to go back to the person who was capturing that information. It might, for example, be the finger error because by the number zero stuck, on the PC or the keyboard. So it's those things that you actually assess what went wrong, and you need to respond to that risk that has been identified. So in this instance, responding would be, we do have confirmation that individual transactions of the invoice add up to 10,000 rand. What needs to go through the system is actually 10,000 rand. So we just need to delete or remove that extra zero so that it actually adds up to 10,000. Any questions on that one before we look at the last section, which is the types of control activities, which I touched earlier? Okay, seemingly there's no question, so let's go to activity 3.7 and listing the 6 types of control activities. Number 1, it's approval authorization. From the example that I've just made, you've got the what we call in other businesses the maker. It's that person who receives the invoice, processes or captures it on the system. We've got a checker, that is a supervisor or manager. They checking if that information has been done correctly before sending that information to the finance manager. We've got segregation or division of duties. That is also an example of segregation of duties where the responsibility for the final approval of the payment request does not sit with the supplier or the procurement manager. It sits with the finance manager, and it might not only be the finance manager. Break it down a bit. You've got that maker who's a person processing the invoice. You've got the manager or the supervisor. They are confirming that yes, we've got an invoice for 10,000. We are making a payment request for 10,000. Once they sign that off, it doesn't go through via the bank for that payment to be made. It first goes through the finance manager. So this is also a case where the finance manager is always aware of monies going in and out of the bank account. So now with the finance manager, also maybe in their team, they've got, let's say, for example, the assistant manager. They first check if exactly what we've received from the procurement department is correct before actually sending it to final sign off with the finance manager. So that is segregation of duties. You don't have one person who is the owner of the business, unlike, for example, a sole prop, but in the instance of a partnership company or cross corporation, you don't have one person who looks at the invoices, processes the invoices, makes payments. No. Segregation of duties, you've got individual people who are doing those activities. Isolation of responsibilities, also in relation to segregation of duties. One person is responsible for a specific task. The supervisor, as much as they do approve invoices, they do not approve hiring or firing of employees, for example. That is isolation of responsibilities. You only have certain responsibilities. Access or custody, in this instance, security. For example, that's why you don't see the CEO or the CFO or the internal auditor or the cleaner having keys to the office. That is done by security. That is also another way of isolation of responsibilities. You don't want a finance manager coming into the office after hours, making fake invoices, for example, getting it through out of the system, because there is no segregation of duties. That's why there's security measures. Also, for example, when you go into work, that's why there's, for example, you need, like, for example, where I work, you need to, access control is via your thumb, that is confirmation that you are at work. If not, you might be in another office, then obviously, there are ways of confirming that you are in another office. Comparison and reconciliation, also in that example of invoices where you've got an invoice of 10,000 rands, you compare and reconcile it with a payment request file. Yes, I do see a payment request of 10,000 rand. Performance reviews, this is more on reviewing, for example, let's say with employees, if you are tasked to do certain responsibilities, come year end, your performance will be reviewed. There is another way of making sure that you are doing what you're supposed to do. Any questions? I know I might have run that through, however, tried to be as concise as I can. Any questions before we move to the next one? Any questions, comments?
No questions.
No questions. Thank you. Should we take a 2-minute break? Let's take a 2-minute break. Maybe just get water. So now it's 1:10, 1:12. We need to be back, please. Okay, let's continue. Just maybe 10 seconds for everyone to be back. Okay, so thank you everyone. So we just covered what we did in the previous session and what we're supposed to cover regarding internal controls. As I said, you need to go through 3.4 and 3.5 as self-study. We'll just touch on a bit for when we start our session for next week. Also, just a reminder that you need to pre-read for the next session so that it makes it, more familiar when we're going through the session. I will just, which is I actually forgot, I will just paste the link to the register for those who joined a bit later. Let me quickly do that. My internet is a bit slow. Okay, so I've pasted the link to the attendance register. So even if you hadn't done it when we started the session, please click on that link. It will ask you just to confirm your attendance. I'll just share my screen of the presentation again. Okay, so let's start with today's session, which is topic 2, internal auditors. This is starting on page 33 of the study guide, which we'll use a bit more today. So firstly, we will cover what the introduction to internal auditing, the responsibilities of the internal auditor. We'll do a Google search, professional conduct requirements for internal auditors, and internal audit and corporate governance, how the two relate to each other. So starting with introduction to internal auditing. So just maybe to start off, positioning the internal audit function on the bottom of page 35. It says the board of directors are responsible mainly for the governance process, that is, establishes and maintains corporate policies and provides information about its stewardship. Now that's accountability. The executive management is responsible for conducting the risk management and control processes. The audit committee is a subcommittee of the board overseeing the internal audit activity and external auditors. Just to touch more on the executive management, so we'll all know that a company can have a CEO, CFO. Another addition to that executive management is the internal audit function or the internal audit committee. They are generally seen as on the same level as the CEO, the CFO, but we'll touch that on the next page. So in terms of the Companies Act, state-owned companies, listed companies, and larger private companies must have an audit committee. Now let's look at the crux of the audit committee. So remember, we're still positioning the internal audit function, and then we'll go to the detail what internal auditing is. So let's first start with that diagram on top of page 37, diagram 5. So if you remember last session, we talked about stakeholders. So stakeholders, it's inclusive of, for example, your shareholders, your suppliers, the banks, any other person that is, you know, is has got a relationship with the company, including employees. Now, the board of directors are the people, as I've said earlier on, they are the ones who establish the direction of the business. They are the ones who, for example, decide should we expand to Africa. They are the ones who always see the bigger picture of the business. And then with your executive management, they are the ones who deal with the day-to-day operations of the business. So the board of directors are always accountable to the stakeholders. As I said, it could be shareholders, banks, suppliers, or employees. And then below the board of directors, there is an appointment made of the audit committee. The audit committee, I'll start on the left side. We've got external audit. So remember, we're dealing with internal audit, not external, but basically what external audit is, which we'll also cover in next week's session. External audit is, responsible for overseeing that the audit committee are precise, are efficient, are effective, are confirming that it's true that the company is, for example, has got effective internal processes, or they confirm who they are. So they always oversee, they're that third eye, or third person who actually confirm that what the company is reporting on is actually true. For example, let's say with the internal audit division, they are confirming that everyone that we've hired, we do have a record of their CV, qualifications, experience. Now, that would also be contained in the annual financial statements. There is an internal audit report made by the internal auditor confirming, or the chief audit executive confirming, that everything is true that has been reported. But now with an external auditor, it's, for example, let's say when they want to have a different opinion to what has been reported on, that's when then external auditors come into the picture. They also go through all the documents, all the statements, making sure that what we have recorded is exactly what it is. And as I said, with internal audit, that's where we do everything internally, where we do that confirmation. If, this employee we are saying works for the business, do they exist? Does everything check out for that person? And both of the internal and external audit, they provide assurance. Not to, we always say with auditors, we don't ensure, but we assure. So the difference between the two, when you ensure, is when you're 100% saying that, look, what this says is, but with assurance, you are giving still the same, but you are not saying specifically you might have seen the record of that. For example, let's say in a year, our business has done 100,000 invoices. It would be very tedious to go through all those 100,000 invoices to actually see that, if we had said, the invoice had said, let's pay 10,000, we pay 10,000, but we always do a snapshot, or we always, use a sample when we're doing our internal audit. So not to, make it a tedious process. So we always make assurance that what we have been provided with is what has been reported on. Now, with the internal audit department, a chief audit executive is appointed. If you remember, I said earlier, the chief audit executive, the chief executive officer, the chief financial officer, they are all part of the executive management. No one is less than the other. But specifically with the chief audit executive, their role is specifically with internal audit, and they all form part of the audit committee. This is also explained on page 36, further on to page 37 of the study guide, what we've actually spoken about. If there are any questions when you have gone through the work, please write them down, and then we can touch them again when we start next week. Let's look at now the audit committee responsibilities and functions. This is on chapter 4, page 33 of the textbook. So the reason why I also, or actually before I touch on that, let's first go to page 38 of the study guide defining internal auditing. So you will notice later on when we go, actually after this, when we go and look at a document called All in a Works Day, the responsibilities of internal auditors. The Institute of Internal Auditors of South Africa, they've got their own definition of internal auditing, but what we have, it's contained on page 38, definition of internal auditing. So it says here, the Institute of Internal Auditors, in terms of their international standards for the professional practice of internal auditing, which is the standards of 2012, accepted the following definition. Internal auditing is an independent, objective assurance and consulting activity designed to add value and improve an organization's operations. It helps an organization accomplish its objectives by bringing a systematic, disciplined approach to evaluate and improve the effectiveness of risk management, control, and governance processes. I think most of it we had touched when we were also even on internal controls, but we will go through more of it in detail when we also look at the objectives of internal auditing when I open up the document that I'll show you earlier. But firstly, let's go to the responsibilities of the internal auditor. But let's start with the one for the audit committee, and this is chapter 4, page 33 of the textbook. Okay. So the responsibilities and functions of the audit committee, as I said, chapter 4, top of page 33. So it makes reference to King 4. The role of the audit committee is to provide independent oversight of the effectiveness of the company's assurance functions and services, in particular, focus on the combined assurance arrangements, including external assurance providers, internal audit, and the finance function, the integrity of the financial statements, and to the extent delegated by the board, other external reports issued by the company. And let's look at the last one of the many. The audit committee carries ultimate decision-making power and accountability for its statutory duties, as explained in the 2 points above. However, if the audit committee is assigned responsibilities beyond its statutory duties by the board will be ultimately accountable for such delegated responsibilities. So I think that is just self-explanatory. They've got their own responsibilities to carry on, but should there a need arise where the board will ask them to do an extra function, the responsibility will always lie with the board of directors, because that will not be specifically with their mandate. So as I said, we just looked at 3 of the 5. You're more than welcome to actually go through over it, because also you need to complete the section 4.1. That is actually just confirming what we've looked at there. So it's actually in the textbook. Looking at page 38 of the study guide, that's where we looked at the definition of internal auditing. We'll look at through it just now again. Section 4.5, the role of the Institute of Internal Auditors in South Africa. There's an internet activity. There's also the types of professional levels, for example, the internal audit technician, the general internal auditor, the certified internal auditor. You're more than welcome to do that as self-study, to actually go and see what the different types of professional levels is, and also actually how the Institute of Internal Auditors, which we call it the ASAP chapter, came into being, and so forth. But I want us now to go to study Unit 5, Responsibilities of the Internal Auditor. 5.2 looks at all in a day's work, a look at the varied responsibilities of internal auditors. I'll open that document and we'll go through it. So this is the document that I actually had to download. I just did a search on the internet, exactly as it is, all in a day's work, a look at the varied responsibilities of internal auditors. It makes reference to page 2 and 3, but we'll just go through the whole document. Okay, yeah, so it's just an introduction of how we'll achieve the objectives. For example, here, it says for the board to steer the organization effectively, board members must receive timely, accurate information about the organization's many strategic, operational, financial, and compliance risk, as well as assurance that the risks are being well managed. So as I said, internal auditing is actually about risk mitigation. But you can read through all of that. As it says, enter the internal auditor. So that's where we come in. What is internal auditing? So remember, this is the email, so the website for the Institute of Internal Auditors as an organization. This is the SA chapter, and this is the international or global chapter, but we always refer to this one. So this is according to the Institute of Internal Auditors, as we had covered it earlier, but let's go through it again. Internal auditing is an independent, objective assurance and consulting activity designed to add value and improve an organization's operations. What we mean by independent is the chief audit executive with the audit division, they work independently. So for example, there should not be any influence from either the CEO or the CEO or any other person in the business. If they see an irregularity, they must actually report on the irregularity, regardless of, the chief audit executive and the CEO are best buddies. That is not the case. They must actually act independent. They must provide objective assurance. They mustn't be influenced to abide to what that person is saying. They must give their own objective assurance. And it is a consulting activity. So firstly, internal auditing was more about it being a watchdog, and by the true meaning, a watchdog, actually checking, exactly if everyone is doing what they need to do. But it has moved from that to being a guide dog. We're guiding the finance department or the procurement department to do things this way, hence the word, it's guiding, not more of a watchdog. Let's see here. It says at its simplest form, internal auditing involves identifying the risks that could keep an organization from achieving its goals, making sure the organization's leaders know about these risks, and proactively recommending improvements to help reduce the risk. This is when we looked at the stages of internal control. That's when we said it must be defined, identified, assessed, and reported on or acted on. That is actually what it's saying there. Let's move along. So we even have a comment here by Leon Sheffield, a member since 2008. Internal audit functions provide a number of important services and are often the catalyst for improving organizational governance and risk management. That's self-explanatory. But what I want us to go through, so this is just a summary of what internal audit is. It's assurance, insight, and objectivity. Who are actually internal auditors? So this is what we're covering today. This is what we'll cover next week, but let's look at this side. So internal auditors are typically employed by the organization unless the function is outsourced or cost-sourced, though independent of the activities they audit. Broad focus, risk management, corporate governance, organizational objectives, operational efficiency and effectiveness, compliance with laws and policies, accurate financial statements, and more. So basically, the list that has been given there is, the most common that internal auditors focus on. The diverse background and skills data set. You need to have communication skills, IT skills, for example, if you need to audit. So you also to have IT auditors, but let's say in an instance where systems processes are systematic, so you need to go through, let's say for example Oracle, to actually check the information that is there. So you need to have some idea of IT. Data mining and analytics, that is more on accessing databases, analyzing that information. Business and industry specific knowledge. For example, if you're an auditor in the finance industry, you should, for example, be aware of the FASE Act, FICA Act, anti-money laundering laws. You need to be up to date with the industry you're auditing, and now just basically accounting skills. So that is more of the control activities where we talked about comparison and reconciliation. So you must know if there's a debit, there must be a credit, and so forth. With internal auditors, we are backward looking and forward looking. So that is, we always look at the past, what is the risk that has been identified, and how can we mitigate that risk in the future. That's when we talk about backward and forward looking. But maybe just in a nutshell, for external auditors, just for us to have an idea what they do, they are hired by the organization to provide a specific service. They are mostly concerned about financial statements. They primarily need to have accounting background and skills because it's in relation to financial statements. And backward looking is they always refer back to what has been reported to in the past. Any questions on what we've just covered so far? Any questions?
No questions. We're still good.
Thank you. We're still good. Actually, who's my subscriber there? Is it Azi?
Yes.
Okay. Okay. Let me reserve my comments for later. Okay. So let's look at internal audit responsibilities. So it first starts off, depending on the structure, maturity, and resources of a function, internal auditors may perform some or all of the following tasks. Number one, offer insights and advice. So this is more on, for example, offering Okay, I've got someone whose mic is on and I'm getting feedback on my side. Okay, thank you. So we offer insight and advice. So this is more on, with a specific function. Let's say, for example, we're talking about segregation of duties. That's where we offer insight and advice on, for example, there must be a specific team responsible for checking or screening the invoices before it actually goes to the person who's going to record the information on the system. So that would be the insight or the advice that we would need to provide. We evaluate risk. Risk could be everywhere: natural disasters, loss of key suppliers, reputational damage, inefficient operations, fraud, lawsuits, policy violations, regulatory compliance, theft. Like there's a lot that we evaluate, and as we said earlier, it just depends on the business. So obviously, if you're still a small business, the risk might not be that huge. However, I think one of finance is the most one, where, for example, let's say you do not have enough suppliers or clients or customs for your business. It might be, that risk that you might not be operational for quite some time. Other responsibility we assess controls. So this is where, for example, if we're saying we've got a CCTV security in the business, is it in working condition? Are backup done properly? Is the data storage devices enough? What should happen if there's a power failure? That's when then, if, for example, let's say we do not have backup power specifically for CCTVs, we could offer insight and advice that, hey, actually we should have, for example, let's say a backup generator or a universal power supply, that is so that when electricity goes off, the security system is still in working condition. We ensure accuracy. That is, we are just giving that second thought or second confirmation that yes, what you are reporting on is exactly what we can see. For example, it says here, internal auditors ensure financial statement accuracy. They examine the reliability and integrity of financial and operational information. Self-explanatory. We improve operations. We improve how the business operates. If, for example, we are a cell phone store, we always keep cell phones at the back. We need to have two people. So you've got the consultant who would be assisting the client in buying the cell phone, and you would have a manager who would actually go and take the cell phone at the back. That is improving operations. We don't want a case where, when we need to have the manager to take the cell phone at the back, they're not at work or they do not have the keys. That's when we offer that advice, that guidance, that there should always be, a second person or a person to always go to the storeroom to pick up, whatever needs to be picked up. We promote ethics. So this is more in relation to the vision or the code of ethics for the business. They need, we as internal auditors, actually, we need to promote a professional ethics throughout the whole business. What we say we are, we should actually be that. We review processes and procedures. I think we touched on a bit on that. Also monitor compliance. We assure safeguards. We investigate fraud. We communicate results. So the communication part, it's that last bit of the stages of risk identification where we need to report. So with looking at the diagram we touched on earlier with the internal audit function, we report on assurance. We need to report that to the chief audit executive. So that is sort of like, the big boss for our department. And the big boss, which is the chief audit executive, sitting with other bosses, the CEO, the CFO, and any other chief officer, when they're sitting or reporting to the board, the chief audit executive will also be reporting on the internal audit function. And what we've just covered now on the responsibilities will be more or less what they would be covering through that session. And then the last two parts of the document is actually just to go through as an FYI, actually the last page, and that's it. And that's just the details for the main head office. So what we've actually just covered now is the objectives of internal auditing, looking at this document. Now we'll be looking at the professional conduct requirements for internal auditors. And while I do that, any questions? Let me just check here if I don't have any. Okay, any questions while I'm just changing screens? Okay, no questions. So now we're looking at professional conduct requirements for internal auditors. This is on page 43, and what we actually going to talk about now is ethics. Professional conduct is basically ethics, specifically in relation to internal auditors. How should we portray ourselves? How should we act? How should we react or proact in certain situations? For example, if I know there's a case pending on one of my friends in another department, will it be right for me to actually, give him an FYI that, hey, we're actually, investigating you for fraud or something, so we're going to look at those things. So the professional conduct or the ethics, there is a document that has been designed by the Institute of Internal Auditors, which is called the IIA Code of Ethics, and is actually found on the International Institute of Internal Auditors website, which is worldwideweb.theiia.org. You can also access it as a PDF through that link that has been provided there. The purpose of this code of ethics is to promote an ethical culture in the profession of internal auditing. And what I will do is, instead of actually going through the website to go and download it. Here we've given a snapshot of what it is, and this is what we'll be covering. So at the top of page 44, it starts off by saying, the Institute's Code of Ethics extends beyond the definition of internal auditing to include two essential components. Number one, principles that are relevant to the profession and practice of internal auditing. That is the main principle or main crux of the ethics. And then below that, you have the rules of conduct that describe the behavioral norms expected of internal auditors. You will see now when we go through the principles, we'll go into the details of it as well. And this is still on page 44, 6.3, and let's start with the principles. So it says here, internal auditors are expected to apply and uphold the following principles. Number one, integrity. And what do we mean by integrity? The integrity of internal auditors establishes trust and thus provides the basis for reliance on their judgment. So remember, I said we first look at the principle, which is sort of like a heading or main heading of the ethics, and below that we have rules of conduct, and this is on page 45, 6.4. So under integrity, it says that internal auditors shall perform their work with honesty, diligence, and responsibility, shall observe the law and make disclosures expected by the law and the profession, shall not knowingly be a party to any illegal activity or engage in acts that are discreditable to the profession of internal auditing or to the organization, shall respect and contribute to the legitimate and ethical objectives of the organization. So basically, integrity is, I think the saying goes, how would you react to a certain situation if you are the only one in the room? For example, let's say, for example, you are working at the bank, you are checking if the bank is saying they've got 100,000 in the bank, you're actually physically counting the money. So part of integrity is, if you are placed alone in that room, would you give yourself 100 or 200 rands? Integrity is all about, you must always do what you would do if there are other people in the room, the same way you would do it even if you are alone, or vice versa. So in an instance where you are counting money, you are not going to take that 200 rands and put it in your pocket, because you would not do that if there were other people in the room. So it's all about doing right even if no one is watching. Basically, that's integrity. You should perform your work with honesty, diligence, and responsibility. Looking at principle 2, which is objectivity, internal auditors exhibit the highest level of professional objectivity in gathering, evaluating, and communicating information about the activity or process being examined. Internal auditors make a balanced assessment of all the relevant circumstances and are not unduly influenced by their own interests or by others in forming judgments. Let's look at the rule of conduct, what it says. It says that internal auditors shall not participate in any activity or relationship that may impair or be presumed to impair their unbiased assessment, shall not accept anything that may impair or be presumed to impair their professional judgment, shall disclose all material facts known to them that, if not disclosed, may distort the reporting of activities under review. Let's look at Steinhoff. So if you actually ask yourself, most probably, how long have the internal auditors not picked up that there was wrongdoing in the company? Because looking at the reports, it's been some time that there were things or circumstances that would actually be alarm bells, that not everything is done as they are saying, and as a result, once everything was actually picked up, that's why the company crumbled. So as an auditor, you need to be objective. You don't need to be influenced. For example, the CEO must not come to you to say, okay, look, when you're auditing that specific payment of 10 million rands, and then although when you look at the individual transactions of the invoice, that the amounts are ballooned do not consider that, however, what I will do is I can buy you a car, or I can transfer X amount to your bank, or I can buy you a house. In that instance, that's where then your judgment will be influenced, and you will not be objective, which is also what we're seeing in the Commission of Inquiry. There was a time where there was a PwC auditor who was put on the stand, and there were some discrepancies in his reporting where, an objective person should have picked up, but most probably there was influence. We do not know the end, end result, if he was influenced, but those are the things, that happen, that will actually, put you in that spot. If you are unbiased, you do everything objectively, then everything will run smoothly. Everything that you report on will be of a professional conduct. Looking at confidentiality, this is on top of page 5. Internal auditors respect the value and ownership of information they receive and do not disclose information without appropriate authority unless there is a legal or professional obligation to do so. As I said earlier, you've got a friend who works in another department, you're investigating him from fraud. It's a weekend, you're having drinks. Oh, by the way, we're investigating you for that payment that went into your account or so forth, or that payment that we do not have any invoice for. That is also what we call tipping off, although we don't specifically cover it in this module, but it's actually called tipping off. You will find out there are people who are called whistleblowers. Those are the people, regardless if they work specifically within the department or company or have relations with that company, if there's any unprofessional conduct, they do report on that. And you will notice that with some companies, they do have a whistleblowing or fraud hotline that you can call to report any irregularities. So, for example, you are having a meeting with the director, and the director would specifically tell you that, look, instead of charging the company 10,000, charge 20,000. Once payment is made to you, you will transfer the 10,000 to me. You can also report that, to that company. You'll be termed as a whistleblower. But if you actually, let's say you are not in that meeting, but you are aware that is happening and that director is being investigated, and you do tell that director that, hey, you are actually being investigated for that transaction, then in that instance, it will be called tipping off, because you are tipping off the person that is being investigated. So it's all about confidentiality, competency. Internal auditors apply the knowledge, skills, and experience needed in the performance of internal audit services. And let's look at that. So bottom of page 45, it says internal auditors shall engage only in those services for which they have the necessary knowledge, skills, and experience. Don't, like, for example, say in your CV, you've worked for PwC as an internal auditor for X amount of years. You are responsible for managing a team of 50 people, only to find out, for example, you're just a junior auditor. It's all about competence. You shall perform internal audit activities in accordance with the international standards for the professional practice of internal auditors. You shall continually improve your proficiency in the effectiveness and quality of the services. So this, if you are a member, as you will note that when you are reading the section for the Institute of Internal Auditors, you can also become a member. There are different member levels. Also with that, there's a part we called continuous professional development. So any changes that happen in the industry or the auditing or the internal auditing fraternity, there are seminars, there are workshops, to update you of what is happening. So that is more about being competent. If, for example, you need to do a postgrad qualification in internal auditing, you can do that. If you want to be a certified internal auditor, you can do that. If you want to be specialized in forensics, you can do the certified fraud examiner or forensics, exams. So you must always be up to date with the industry you are working in. Also, you will find out even lawyers can become auditors. It is because of their legal background. For example, you can work at a law firm as an auditor, specifically, let's say, for example, the lawyers have got family lawyers. So you will audit if the judgments that have been made are always in relation to the act that prescribes to family law. So there is that instance. Also, you can get instances where there are IT auditors. Also, similar definition. Any questions before I touch the last part, internal audit and corporate governance? I've got 7 minutes and then we're done for the day. Any questions with that I've covered? Okay, let's cover the last session. So now we're tying internal audit and corporate governance. So we touched on internal audit and corporate governance in the previous session. Let's look at page 48 of the study guide. We're going to go through the diagram and we will be done for the day. So I'll start off. So firstly, the audit committee. So this is in summary of what we spoke about. So the audit committee appoints the chief audit executive, who is independent, objective, competent, and has authority. So that is the right person for the job. Also, the audit committee oversees the internal audit division, which has the chief audit executive. The internal audit division have skills and resources, which is now this is specifically for the auditors in that department. They supplement specialized services that offer advice and guidance or insight to the different departments in the company. The internal audit provides objective and relevant assurance, follows an approved risk-based internal audit plan. Remember, we always spoke about risk mitigation that contributes to the effective governance, risk management, and control processes. Under effective governance, we are reviewing the company's governance processes. Under risk management, we're assessing the adequacy and effectiveness of risk management. And under control processes, we're analyzing and evaluating the business processes and associate controls. So this is basically what we touched on through the session today. If there are any questions on your side regarding what we did today or even the previous session, that will be all for today. But just to confirm, we'll still have another session for next week, same time. Most probably not the same place because we're dependent on load shedding, 12:30 till 2. And we'll be looking at the external auditor. I'll be taking questions for the next 5 minutes while I paste the link to the attendance register for those who have not signed the register or confirmed their attendance, and then I will also attach the link to the feedback form so that you can confirm or actually give feedback on today's session.
It's fine, Suku. I will paste it for you and you can take the questions.
Okay, thank you very much, Claudine.
Okay.
Okay. Let's have that Q&A. Questions for me, please. I'll stop sharing my screen so long. Do I have any questions? Okay, if there are any questions, what I will do is I will okay, let me see here. So I'm just going to check the responses on my phone. Okay, so no questions so far. Okay, if there are no questions, as Claudine had advised, the feedback session form the link will be pasted shortly. Also, what I will do is I saw that when I was going through the responsibilities of the internal auditor, my screen wasn't sharing, so I will add that document to today's session after the session so that you can have access to it, although you can actually even download it. I will just put it there for reference. I will also include the code of ethics document just to confirm the last piece that we did. Well, I'll just wait for everyone to log off. If there's maybe there's another question, maybe you don't want someone else to hear, and then I'll log off at 2 o'clock. But thank you very much for today's sessions, and I'll definitely see you guys next week, Saturday.